The godfather of emerging markets. That's the nickname this week's guest on the Money Show MoneyMasters podcast is known by. Why? He's visited more than 110 countries and traveled more than 1 million miles doing so. He's invested in more than 5,000 companies throughout his long career. He's written a dozen books on investing in economics, and he is one of the world's foremost experts on investing in emerging and frontier markets. And I couldn't think of a better time to have this guest on. For one thing, many foreign markets have vastly outperformed the US S&P 500 in 2025. For another, shifts in global trade and tariff policy are leading US and global investors to reevaluate their asset allocations and geographic exposure. Countries like China, India, Taiwan, Japan, and even Argentina are offering up new investing opportunities, but also introducing new potential risks into investor portfolios. So without further ado, let me introduce the guest. He is Dr. Mark Mobius, chairman of the Mobius Emerging Opportunities Fund. Mark, welcome to the program.
Pleasure being with you.
I know that you're in Dubai. You've obviously been traveling quite a bit in the last year or two and looking at opportunities across the globe in this environment. So I wanted to start with sort of your big picture view of where U.S. and foreign markets stand here, and what are some of the things that have been driving noteworthy, on a noteworthy point, foreign market outperformance of U.S. equities.
Japan is one of the interesting places. In fact, I was just there a few weeks ago and visiting some companies, and there's some excellent companies in Japan that are performing well and still very profitable, not very expensive. So I would say Japan is a place where you want to look. China is coming back, believe it or not. I mean, I was a big fan of India for so long, I still am, but China is outperforming India by a pretty wide margin. And I think the reason for that may be a loosening up by the Communist Party. I think Xi Jinping is loosening up his hardline stance for the local economy because he realizes that he's got to promote the domestic economy. Otherwise, it'll be a real political problem. So China looks very, very good. And then we return to Southeast Asia. Probably the most noteworthy place would be now Vietnam and Thailand to some extent, but Vietnam is the more dynamic of the economies in that part of the world. So those are the places I'd be. Of course, we can't forget Taiwan. Taiwan is an incredible place to invest. We're finding very, very good bargains in Taiwan. You know, one of our important criteria is return on capital. And Taiwan companies are very, very good in that regard. So that's another place you want to look.
Wonderful. I definitely want to walk through essentially each of those countries and the investment case for our stock space there. But I do want to start here in the U.S. Many of our listeners or viewers will be watching from here in the States. And I'm curious, so much of the media coverage is about tariffs, it's about trade, it's about an America First type policy. And I'm curious as to your thoughts on what impacts you see that having on global investing and the U.S. and foreign economies.
Well, it's definitely having an impact, depending on which country you're talking to. India would be a good example now with the 25 plus 25 tariff put on the Indian exports to the U.S., and also the recent decision to tack $100,000 onto the people who want to get visas. These are the high-level software engineers that the U.S. is using a lot from India. That's going to have an impact. But even in India, if you look at the total picture, yes, jewelry, high-end gold jewelry is being hit very hard because of the import tariffs, and consumer goods, garments, that sort of thing being hit. But all other sectors are doing fine. So it's a huge country, they have a huge domestic market, and they're beginning to now deregulate the economy, which is so important because it's quite a bureaucracy in India. They have to deregulate. And as they do that, it's going to be very good for the economy.
Why do you think investors have been able to sort of make peace with the issue of trade and tariffs after obviously all the turmoil we saw in the first quarter and rolling into April of this year?
I think they realize that it's you got to use a rifle instead of a shotgun. In other words, you've got to look at individual cases and where the tariffs will hit and where it will not hit. For example, if you look at some American companies, there are many American companies that do not depend on imports and exports, sales overseas. So, those are the companies that will do fine. But even those that are hit with tariffs, they're finding ways to get around these problems with automation, local manufacturing, et cetera, et cetera. So, one of the things I've noticed, as you know, I'm known for emerging markets.
Sure.
And I now use a new term called emerging opportunities. Because if you look at the US market and the number of companies that depend on emerging countries for their sales or their supplies, you realize that if you buy into the American market, you're going to get a lot of exposure to emerging countries. So I think the adjustments regarding the tariffs will take place. They're taking place as we speak. People will adjust to it, and life will go on. It's not going to be a big tragedy.
So let's walk through country by country, some of the names you mentioned earlier. China obviously being the biggest. Do you think that some of what the party's doing over there is improving the economic backdrop and obviously the trade issue? So speak to the investment case there.
Yeah, as you know, when Xi Jinping came in, he wanted to go back to the old Mao period, where the state was the leader of the economy. In other words, state-owned companies would take over private enterprises, or at least state-owned enterprises would be leading the economy. Of course, that's a deadly prescription for such a dynamic society as you have in China. So that slowed down the economy. And then, of course, you had the property problem with a lot of people losing their life savings. They had invested in property. So these two things really woke up the Communist Party, I believe. And they realized that they've got to change. They've got to allow more private enterprise to come up. And you notice Alibaba and companies like that are now coming back. And you see more and more of them being more active. And I believe that's a definite policy by the communist government to do that in order to revive the economy. And as that happens, of course, stock market is doing well. We've seen it outperform.
Okay. Taiwan, of course, there's always the saber rattling in the background of what China might do with Taiwan, what the US might do in response on the geopolitical front. What is the investment case there, and how does that factor, those geopolitical issues factor into any of your investing decisions?
Well, first of all, I don't think China will take hard military action against Taiwan. In other words, it will not be a hot war. I believe they will continue to wear away at the propaganda. And in other words, they're going to keep on convincing people that Taiwan is part of China and they should join the Chinese government. And that may come to pass in the next decade because China is changing and they may become closer and closer to the kind of government structure that Taiwan has with multiple parties, political parties. I know it sounds far-fetched at this stage, but I believe they're going to do that. So at the end of the day, I don't worry about any military action against Taiwan. Now, it could happen, but I don't think it makes sense to dwell on that. What you've got to look at is the incredible dynamism of the Taiwan companies and the entrepreneurs. The economy is doing very well. And as you know, the tech industry is really first rate, and TSMC, companies like that, are doing very well globally, and including China. They're selling a lot to China. So I think Taiwan is really going to do very well.
Okay. Let's pivot to Japan. You mentioned, obviously, again, when we were talking off camera, you'd been there for a couple of months. You posted some fascinating information on your blog there, your visit to Osaka and seeing the Japanese sumo wrestlers train. Found that a very interesting read. What is your big picture thought on investing in Japan? Why is that a favorable environment after so many years where investors seem to avoid the country?
Yes, I mean, for a long, long time, the big Zaibatsu, the companies like the Mitsui, the Mitsubishi, these companies were not that profitable. I mean, they had incredible assets, but they were not growing that fast, and they were not that profitable. I think now they are beginning to realize that maybe they should begin to break up some of these companies and take advantage of the incredible opportunities in the individual components. I mean, they're in mining, they're in industry, they're in consumer goods, they're in all these things, which could be spun off. And I think gradually that could happen in Japan, which would be very, very exciting. What interested us in Japan was the consulting business and the move towards a more and more AI-oriented consulting and reorganization. And we found a few companies in Japan with very good earnings, very profitable, that were involved in enterprise consulting. So I think that's an area which deserves more attention. But as I said, some of these big conglomerates may be worth looking at again.
Another country I wanted to give you a chance to speak about was Vietnam. I know you had talked in recent posts about finding some interesting opportunities there. What are your thoughts on that country and Southeast Asia, for ex-China for that matter?
Well, first of all, the Vietnamese are very dynamic people, very intelligent, very ambitious. And you must remember there's North and South. The South is more enterprising, as you might expect. But the North, although they're running the show in terms of politics, they're allowing the South to have more and more freedom to do enterprises and to open up more and more markets globally. The thing about Vietnam is that they've learned a lot from China. The Chinese companies have gone to Vietnam to manufacture in order to get into the US market sort of through the back door. And many of these companies are not just doing this for show, but they're really actually doing manufacturing from soup to nuts. They're going right through the entire economy. And that's very exciting in Taiwan and in Taiwan and also in Vietnam. You see this enterprise system, which is very exciting. And they're learning a lot from the Chinese and from the Taiwanese and other nations that have been exporting globally.
Okay. You did already touch on it somewhat, but I did want to pivot to India next. I mean, when I look at, again, for US-based investor, many of the ETFs in some of these foreign countries, Taiwan's done very well, Vietnam's done very well, along with Japan, whereas something like the PIN ETF, which allows you to access India as a US-based investor, is essentially flat on the year. How do you think the country will deal with the challenges, whether it's the H-1B question or whether it's some of the other trade tensions with the US?
I think what they're going to do is continue negotiating with the US. They're very, very good negotiators. But more importantly, they're going to start a reforms program in the country. You must remember, I like to consider India as the United States of India because you have all these different states with different languages, both written and verbal languages. So it's very difficult to unify a country like this. And this is what they've been working on all these years. But now they begin to wake up to the fact that they've got to loosen up. They've got to get rid of some of these onerous regulations, which holds back the enterprises, particularly the smaller enterprises. And I think the Prime Minister is doing a good job moving in that direction, but it's not easy. It's going to take time. But now, with what's happening with the US and the tariffs and the restrictions, it's been put on the burner. They're now moving ahead much faster to do that. And that'll be excellent for the Indian economy.
Okay. We haven't talked really about South America yet, but since Argentina is in the news, I figured I'd have to ask you about the latest issues there and a potential U.S. backstop to help the currency and the markets down there. Any thoughts on countries like Argentina or some of these other names that you maybe have mentioned in the past as investment opportunities, or is that something you're looking to kind of avoid for now?
No, Argentina has had an incredible success. It's really amazing. I must admit, I was a little late. I didn't believe what they were doing because, as you know, we've been disappointed very often in the past. But now I see they've really made some terrific reforms. What's most exciting about Argentina is the demonstration effect it will have on other countries in Latin America. I think other countries begin to look at Argentina and say, hey, maybe we should be following these kinds of policies. And that would be truly revolutionary. That would be a wonderful thing to see, but it
Okay.
remains to be seen. And nevertheless, there are opportunities, individual company opportunities in Brazil, in Argentina, Chile, Mexico, Colombia. Colombia is a very dynamic group of entrepreneurs. So there are quite a few opportunities there.
Okay. I guess at this point, we still have some time, but I want to make sure if there is a name or two or three, or maybe whether it's an ETF, individual company, some of the names that you're eyeing in a few of the countries we've talked about, I'd love to hear about them. I know you briefly mentioned Taiwan Semiconductor, for example.
Yeah, I can't give you individual names because we're in the process of buying, but
Fair enough.
I must recommend ETFs. We do have ETFs in our portfolio to give us exposure to countries and sectors, by the way. For example, one ETF, which is quite interesting, is defense, a European defense ETF. So that's one that I think people should look at. And some of the country ETFs you mentioned, some of them have been doing very well. China is doing very well. India, not so much. So we lightened up on India. So I would look at both the country and the sector.
Okay.
And there are a number of very nice ETFs in the technology sector that you can buy.
Let's talk about the technology sector. I mean, obviously, some of that is a U.S. play, but those many tech companies have extreme exposure overseas as well. What are your thoughts on AI? Everybody's asking about it and what's going on in that part of the market. Do you think it's boom, bubble, something you're worried about or not?
I think people have got to realize that AI is simply information speeded up at the speed of light. That's what AI is. It's information that is utilized by people. And we have found AI to be really helpful in our analysis of companies, countries, and so forth, because the information is at your fingertips. Within a few minutes, you get all this information. So it's terrific. And it's impacting every industry, whether it be banking, whether it be our industry, investment management, industry of any type. So I think AI, but we must remember what it is. It's not something that's revolutionary in that sense. It's something that it's a speeding up of the information flow. And it's also covering a wider range of information globally. And that's really exciting. So yeah, we're using AI, and I think more and more companies will be using AI, but it won't be, at the end of the day, it won't be the end all in decision making. It'll help us make decisions, but it won't be it won't make decisions for us.
Got it.
Let's put it this way: we shouldn't allow it to make decisions for us.
Wonderful. No, I understand completely. Certainly, I use AI as a tool in my job as well. Since you brought up Europe, I think it's an interesting dynamic that these countries are going to be spending more apparently on defense as part of some of the shifts the U.S. has done, and certainly to counter some of the threats from Russia. Thoughts on how that's going to evolve and what that means for economies there and the investment case for Europe overall?
Well, Europe, as I mentioned, good idea to buy a defense ETF. A DTF of companies that make armaments because they're spending more and more. I think that it's a stalemate in Europe and it will remain that way. Eventually, both sides, Russia and Ukraine, will tire and it'll wind down. There'll be sporadic engagements, but generally speaking, it'll wind down because the U.S., Trump is not interested in pouring more money into Ukraine. And I think Russia is also beginning to tire. It's had a big impact on the Russian economy. So I'm not too worried about that situation.
Okay, fair enough. I know I'm going to go to Charlotte and see if there's any questions in a minute, but I do want to, just given the theme of this event, talk to you a little bit about precious metals and what's happening sort of in the global monetary system. Clearly an incredible rally in gold. Silver's been following now. We've seen other metals, platinum and so on, begin to play catch up. What are your thoughts on what's driving that and how sustainable do you think that trend is as we get closer to 2026?
It's a very strong trend and is related to money supply growth. If you look at the money supply growth of the US dollar, you'll see it's turning up again. During COVID, of course, it went through the roof, came down, now it's going up again. And, there's a whole new generation of young people who believe that the US dollar is not going to be worth anything in the future. And so they're switching to crypto and to gold. I have some young friends, analysts who are with me, who only have faith in crypto and gold. So I think there's a wide-ranging trend in that direction. More and more people are going to be buying gold, and therefore the gold prices, have gone up a lot. However, I would recommend people to put stop loss limits on their gold. Don't get too carried away. And by the way, that's true of all the stocks. The U.S. market has done so well, has surged to such a high level. It's probably a good idea to protect yourself for the downside. Put stop loss limits on the stocks and ETFs that you're in gold.
Okay. Yeah, no, that's a great point. I mean, I think a lot of people kind of came into this August, September period worried about seasonality. Certainly, I saw a lot of commentary on that, and we've defied a lot of a lot of skeptics in the U.S. market. When it comes to the gold versus crypto debate, any thoughts that you'd have on which side you'd favor, or is it more of a both type environment for those kinds of assets?
For me, I favor gold. However, I would want to go into a crypto exchange as a stock. That might be an interesting investment. But generally speaking, I believe gold is a better investment.
Okay. Charlotte, I wanted to go ahead and give you a chance. Were there any questions that you had in the queue there you wanted to read off so Mark can address them?
Yeah, just one quick question. William Adams was wondering what is the ticker for the European Defense ETF?
A defense ETF's a good idea, I think. I haven't looked at those ETFs yet, but I know the European ones are doing quite well, and it probably makes sense to have something in the U.S. Defense ETFs, because you must remember Trump is not reducing the expenditure on defense, so that will continue moving up. So yeah, it's a good idea to get a defense. I haven't looked at the pricing, so don't take my word for it. You better look at the pricing and so forth. But generally speaking, I'm in favor of that.
Okay, fair enough. What else did you have there, Charlotte, at the moment?
Seems like we're all caught up on questions for now, just that one from William, but I'll let you know if we get any more.
Okay, sure. That sounds good. Mark, I guess I would want to ask, as we get kind of towards the end of the year, 2026 is approaching. Are there any big themes, big threats, I guess I would even ask, that you think investors are going to have to face up to or look to capitalize on in the new year versus maybe what's been working in 2025?
I think the big story will be about China. China is a huge economy, and any political moves in China against the trend towards more liberalization will not be good news for China or for the rest of the world. So that's one thing we have to look at. And then India. India is going to become the largest economy in the world. They're now about 1.2 billion people compared to 800 million in China. Average age in India is about 27. China is about 37, 38. So India is going to be a real powerhouse going forward. So I think you have to watch what's happening in India as well. So I would say those are the two big trends going forward. And of course, the degree to which U.S. companies can take advantage of those trends will be very important.
Okay. And I guess that brings up an interesting point. I mean, outside of, say, technology, are there other U.S.-based sectors or names, ETFs, that you think are good ways to, if you're a U.S. investor who wants to, keep most of your money here but still access growth overseas through, sales that the companies do overseas? Any other sectors that you think would be worth targeting?
Yeah, I would say mining, North American mining, minerals and mining in North America might be a good thing to look at. We have some companies in that sector. And of course, with commodities generally moving up, companies in the mining sector might make sense. I'm not saying that it should be gold, but any mining company of that nature. And The second area would be in agriculture.
Okay.
I think you got to look at the companies in agriculture because the U.S. will continue to do very well in that sector. And of course, with Trump trying to open up global markets, exports will probably surge. It'll be very good for the American farmer.
Okay. One thing I realized we probably haven't touched on, but I think we should in the time we have left would be from a policy front, monetary policy, fiscal policy. Obviously, the Fed has started at least once to cut rates again. I'm wondering how you think the path of rates going forward is as we roll towards the new year. How much you think some of this political pressure will or will not manifest itself in that arena?
Well, I think you should get rid of the Fed. The Fed should be closed down because they've been responsible for all these problems in the economy. Too much money supply, then turn down the money supply. You have these up and down in the economy. So unfortunately, we are stuck with the Fed, but hopefully there'll be some reform. And the best thing that could happen, and it may happen now under Trump, the Fed is given only one task, and that is to maintain stability of the currency. See, now they have two tasks. They have two objectives. One, maintain this currency stability, and two, to help the economy. You can't do these two things at the same time. It's impossible. So hopefully there'll be some reform, and I think the young generation are now beginning to realize the harm that the Fed has done. So, but nevertheless, we got to live with it. And I think you're going to see continuing reduction in the interest rates going forward next year, mainly because of Trump's determination to get those interest rates down.
Do you think then, as a follow-on, that will give more impetus to the trend in the dollar that we've seen? Clearly, the worst first half of the year on a broad base since 1973, I think it was. We've seen some stabilization there, but moving forward, how do you think the dollar is going to react to this environment that we have?
I think the dollar will maintain its strength. It's come down against some. You must remember, some currencies have weakened against the U.S. dollar. Some have strengthened, so it's a mixed bag. The general index of U.S. dollar has come down, but that's mainly influenced by the euro. The euro has, been quite strong. But I don't recommend going to the euro at crazy low interest rates that they have. So I think the dollar will continue to be the leading currency in the world, despite the fact that China wants to change it, wants to get rid of it, wants to do that. The only way that China could do that would be to put the renminbi on gold, the gold standard, which is possible because they've been collecting a lot of gold. China, I think, is now the largest producer of gold, mining gold, and they're buying gold. So that may happen, but I don't see in the short term that we have to worry about that.
Okay. I understand from Charlotte, we do have a couple more questions in the queue, so I'll hand it over to her to read one of them off.
All right, fantastic. Thank you. Starting with this one from Charles, he was just asking, are there countries where government bonds would represent a good opportunity, in your opinion, at least?
I'm not too keen on bonds other than U.S. bonds, because you've got the risk of currency, you've got the risk of interest rates, you've got political risk. So I would not be too excited about bonds. And I must admit, I'm not the expert in that area, but generally speaking, I'd stay away from bonds.
All right, thank you. The next question is from Les. He's asking, in the next 6 months, are there any foreign markets that we should watch for possible upside trading?
Yeah, China would be number one, because that's begun already. I think there could be a reversal in what's happening in India, but we have to watch that. I wouldn't recommend now, but I would watch that carefully because the Indian economy is so dynamic. You can have something happening there. And maybe Mexico is another place you want to look, and Taiwan, as I mentioned, Taiwan.
Okay. So we've got China, India, Mexico, and Taiwan as opportunities there.
Right.
And Eddie also asked, what about Israel?
Israel is an incredible country. So many smart people. So they're doing so well in technology. So it's well worth looking at Israeli companies and particularly companies that have operations globally, global operations. You're going to find some terrific companies. So yes, I would definitely look at it at Israel.
All right. And one final question for you. This one's from Craig. They're asking about Vietnam. Do you have any recommendations on Vietnam?
Yeah, I would look at ETFs, the Vietnam ETFs, and I would also look at some of the property companies in Vietnam. Those are the two that come to mind at this stage.
Okay. Was that the last one you had there, Charlotte?
That is everything. Thank you.
Okay. I get Mark, we have a last couple of minutes here, so I wanted to ask if there's anything that we haven't covered that you think it's important for investors to take away here. I know essentially if I had to summarize what you were saying, cautious on the stock market, maybe after a big run. You talked about some of these individual foreign countries and a few sectors. But again, this is sort of a summary. I guess I would ask if there's anything that we haven't covered, anything you think is most important, is your message for investors watching this.
Well, I think you have to look at the Trump administration very carefully and listen to what they're saying, watch what they're doing, because they're having a global impact. You know, we must remember it's not only about U.S. policy, but the Trump administration is having a big influence on countries around the world. So I would keep a close eye on that. And of course, be careful. There's a lot of false information out there, but you know, look at what they're doing and listen to what they're saying in a very objective way, because that will give you a lot of guidance on which way to move going forward.
Wonderful. Well, Dr. Mobius, I do appreciate you taking time out to chat here from Dubai. I hope you have safe travels. We really appreciate the perspective and questions from the audience. Appreciate all of that as well. Be ready for a full day of education here on gold, crypto, and markets today and tomorrow as well. So thank you again.
Thank you. Bye-bye.